Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Stronger than expected earnings reported from several top companies eased investors' concerns yesterday, pushing the US 500 to its highest level in 2 months. The US 500 added 49 points to close on 2066.53. The US Tech 100 climbed 172 points to close on 4,585.58, and the Wall Street rose 415 points to close on 17,557. Yesterday's largest movers were McDonalds gaining 8.1% and eBay up 13.9%. Looking at commodities, gold remained flat yesterday, losing a total of 30 cents to close on $1,165.70, while Brent crude attempted to claw back some of the previous 3-day losses, adding 34 cents to close on $48.20 a barrel. Anglo American showed how the mining slowdown has hit diamonds by making a deep cut to quarterly production. The miner, whose De Beers Diamonds subsidiary has become an increasingly important contributor to group earnings, further lowered its production guidance for this year after it slashed output by 27% in the 3 months to the end of September. Anglo, which produces commodities from coal to platinum, is the only large diversified miner to depend substantially on diamonds. After it increased its stake in De Beers to 85% under previous chief executive Cynthia Carroll, the stake in the industry's largest diamond miner, by value, has recently helped Anglo to counter a big fall in prices for coal and iron ore. But this year, the global diamond market has been hit by oversupply, with a higher than normal proportion of De Beers, usually buyers, delaying their purchases at the company's regular sales. The market weakness so far during 2015 is set to put even more importance on the forthcoming peak diamond sales season in terms of Anglo's earnings and potentially its dividends. Many analysts already expect the miner to cut its full-year shareholder payout. In Europe, the Germany 30 had a large rally yesterday, soaring 448 points to close on 10,635.3. The UK 100 lagged behind its European counterparts, with the mining sector helping to bring up the index. The UK 100 added 104 points to close on 6,413.6. The European Central Bank signalled it would expand its €1.1 trillion quantitative easing programme in December and cut its deposit rate should the slowdown in emerging markets threaten the Eurozone's economic recovery. The euro fell 1.67% against the dollar to $1.116 after Mario Draghi, the ECB president, said policymakers' measures would need to be re-examined at its December 3rd vote. He said the central bank stood ready to adjust the size, composition and duration of its quantitative easing program. At the moment, it is buying €60 billion of mostly government bonds a month and has said it will continue to do so at least until September 2016. Investors in Europe viewed Mr. Draghi's refusal to rule out an interest rate cut and his allusion to further quantitative easing as a signal to buy, sending prices for European assets sharply higher yesterday. Government bond yields, which moved inversely to prices, fell across the region, with Italian and Spanish benchmark 10-year borrowing rates dropping to their lowest level since April, and the shorter-term 2-year German borrowing rate hitting a record low of minus 0.32%. In today's corporate news, Barclays, HSBC and RBS agreed to £600 million fine for foreign exchange rigging during a US federal court hearing, according to reporters. And that's all for this morning's market update. Thank you and goodbye.